Hey, what's up, guys? John here. It was just a year ago where people are spending $1 million on a JPEG with a picture of a monkey on it or an ape on it. This euphoria that was in this market is getting slowly pulled out of it, and we're seeing it with these sky high cancellation rates on new home builds. We're seeing this now with massive job layoffs. For example, over 24,000 employees laid off by 91 tech companies so far in 2023. This article came out 3 days ago, January 16th, right? So it came out 2 days ago. And so we look at this 24,000 employees. We have a couple things that are going to be happening very, very soon. One is the White House says it will not negotiate over the debt ceiling. Now, will they? Probably. I mean, they've said this how many times? How many times have we played this back and forth tug war game over the debt ceiling? But the big question is just uncertainty. How far is this uncertainty going to go? And it looks like when we pay close attention to companies like Amazon, for example, we look at Microsoft. Microsoft right now is laying off a whopping 10,000 employees. As of today, they're going to start these layoffs. 10,000 employees. Amazon set to lay off more than 18,000 people. This came up today. So these big corporations, these big tech companies are getting prepared for a world of uncertainty in 2023. And in this video, I'm going to walk you through exactly what that's going to look like. Please hit the like button. Hit the like button. YouTube's going to share this content to educate more people about what's really going on. If you are in a situation right now, maybe you have max credit cards, maybe you are in a tight spot and your credit's holding you back, we'd love to give you a free consultation to see how we could help you fix your credit score so that you could potentially do a balance transfer, high interest credit card debt to a 0% interest card and get out of debt faster. Or potentially you want to invest in distressed real estate, you want to get an auto loan, you want the best rates. You can do so at GreatCreditFast.com or give us a call at 561-430-5900. Take a look at this. So Party City also, as of today, they are filing for bankruptcy. Carvana adopts a poison pill, sells $4 billion of auto loans. Reuters, this is Carvana Co., has adopted a poison pill to limit shareholders from raising their stakes and has reached an agreement to sell up to $4 billion of auto loans, the struggling used car retailer said on Tuesday, which is very smart for them for a variety of reasons. One is that most of those auto loans, when you're buying, if you bought a car in 2020, 2021, or even early 2022, there's a good chance if you put 5% down that car is underwater, meaning that the person that bought that car owes more on the car than it's worth. So for them to get out from underneath of those loans, most of which might be with no margin, no equity in their auto loans, it probably makes sense, especially given the balance sheet of a Carvana. Company shares gained 6.5% to $7.47 in afternoon trade. Ally Bank and Ally Financial will buy the loans, the company said, giving Carvana a fresh source of funding as it tries to restructure its operations. Carvana said the poison pill will help safeguard a significant U.S. federal national operating loss, NOLs, that could be available to offset future taxable income. The company's ability to use the NOLs would be substantially limited to its 5% shareholder increase from ownership, Carvana said. Companies with large NOLs often adopt poison pills, enabling them to cut their tax bill. Poison pills are also adopted to ward off hostile takeovers. Morphe is a beauty brand. They're ending all of their partnerships with influencers such as Ariana Grande and a variety of other ones, and they're entering bankruptcy. Right now, casino mogul Steve Nguyen, just to add everything up, Steve Nguyen of Wynn Hotels and Casinos is selling $300 million of his luxury property, just unloading basically everything he's got into the housing market, right? He wants to get rid of these luxury properties. So you have some of the biggest tech companies issuing massive layoffs. You have interest rates going from 2.5%, 3%, 30-year fixed to 6.5% to 7%. You have all this wealth and liquidity that's being pulled out of the crypto markets, stock markets. What's ultimately happening is you're seeing the money flow into precious metals. People are starting to look at the world and say, you know what? Is it worth risking it, putting my money into stocks, not know what's going to happen, or should I safeguard it and invest in precious metals, which historically has proven as a more stable investment? Now, what I think is ultimately happening is I think that consumers, both small, medium, and large, are starting to look at the future with a lot of pessimism. They are really taking risk off the table right now, and I think it's for good reason. We look at the smart money They're getting ready to weather a storm. The big question is, how bad is this storm actually going to get? When you're laying off 24,000 employees and it's only January 18th, I mean, that to me is saying that the storm's going to get bad. The year of 2023 began on a bad note for tech workers globally. 91 companies have laid off more than 24,000 employees in the first 15 days. About 24,151 tech workers lost their jobs, dominated by companies like Amazon, Salesforce, Coinbase, and others. According to the layoffs, crypto lending exchange Crypto.com last week announced the company will reduce its global workforce by approximately 20% amid ongoing economic headwinds and unforeseen industry events. In India, companies like Ola, which fired 200 employees, voice automated startup Skit.ai dominated the headlines in January. In December last year, over 17,000 tech employees were shown the door. According to the website, which has been tracking job losses since the start of the pandemic, 153,100 workers were let go in 2022. So far, 24,000 employees in January. And last year was 153,000 employees. So you see the progression. That's what's happening right now in this economy. Led by Meta, Twitter, Oracle, Nvidia, Snap, Uber, Shopify, Intel, Salesforce, among others. The number of layoffs reached its nadir in November, which saw 51,489 tech workers lose their jobs. Roughly half of their workers of 2022's job losses were in November. So you look at just November, December, January, probably 100,000 people lost their jobs inside the tech space. It's pretty incredible, especially when you track what's happened with Amazon. When you look at Amazon was going through a massive expansion in 2020 and 2021, and they halted construction. They started shutting down call centers, issuing massive layoffs. The reason for this is, I believe, that they simply realized that they're going to have more of a financially depressed consumer that's not going to have the money to go out there and continue to spend. And so for that, what they're likely looking to do is pull some risk off the table, see how bad this is actually going to get, and then once they have more information, they're going to be able to use that information to make smarter and sound decisions going forward. And I think we're going to start to see that more and more through Amazon, through Microsoft, through Walmart and Target, and a lot of these larger corporations that are low-cost providers. They're going to really kind of get a gauge on what this is actually going to look like. We take a hard look at what happens. A lot of people would always say, you can always refinance your property. But when you look at what happens, when things get tough, people want to refinance their properties to put some cash away, to make good on their bills, to try to weather a storm. How do you weather a storm when interest rates went from 3% to 6.5% to 7% and you can't refinance your property? People are going to have a harder time accessing that liquidity. They're not going to have the equity in their deals to be able to do it. And so what I think is going to happen is I think we're going to start to see a ripple effect across the labor market, across the real estate market. I think we're stepping into some really, really big problems in this economy. And I've been talking about that for a while. I said in 2021 that this is probably the height of it. And it's been a slow bleed in 2022. But I think things are going to get progressively worse in 2023, especially 2024. But inside of those tight times, inside of those troubling times comes the massive opportunity. And that's when most people grow true wealth. True wealth is built during the tough times. Artificial fake wealth is built during the bull markets like what we saw in 2020 and 2021. That wealth is getting transferred into the hands of the patient, to the hands of the prepared, to the hands of the smart and savvy investor. What do you think about this entire situation? Do you think that this is going to get worse? This Google layoffs 2023 could see another 11,000 people lose their jobs. To me, this is what it's signaling. It's signaling that we are stepping into this world of uncertainty. And I think with this, we're going to start to see, again, massive opportunity. Drop your comments below, hit the like button, subscribe here, subscribe to my second channel as well. And if you need help fixing your credit, this is one of the big problems that I see a lot of people make right now. Right now, the average interest rate on a credit card is almost 20%. It's like 19.05%. It's the highest it's been since 1985. When you have record high inflation, you have job losses, you have an affordability crisis, people take something that has increased in price, such as eggs, food. It's increased in price 10, 20, 30% over the last couple of years, and they put it on a credit card, and that credit card is the highest interest rates we've seen in 30 years, right? So what's ultimately happening is the world's getting a lot more expensive. So if you have bad credit, the world just gets harder and harder and harder and heavier to carry. So if you have really good credit, you're able to pivot and move. You're able to likely get access to more money. The world becomes a lot easier. So if you need help fixing your credit, we'd love to help you at GreatCreditFast.com. Our phone number is 561-430-5900. You can call for a free custom consultation. That's 561-430-5900. And for short form content up in the banner, LinkedIn, Twitter, Instagram, TikTok. Catch you guys in the next video.